Advanced Micro Devices, AMD, is a global semiconductor company that designs and develops a wide range of processors and graphics cards for the consumer, enterprise, and data center markets. Its core business model is a fabless one, meaning it outsources the manufacturing of its chips to third-party foundries like Taiwan Semiconductor Manufacturing Company, TSMC. This model allows AMD to focus its resources on research and development, R&D, and chip design. AMD's main competitors are NVIDIA in the GPU and AI chip markets and Intel INTC in the CPU market. Under the leadership of CEO Dr. Lisa Su, AMD has orchestrated a remarkable turnaround, gaining significant market share from its rivals, particularly in the server and desktop CPU segments. Financial health. AMD's financial health has been a story of a successful turnaround, with strong growth and improving profitability. Revenue and net income. In Q2 2025, AMD reported a record revenue of $7.7 billion, marking a 32% year-over-year increase. The company's net income for the quarter was $872 million. Profit margins. AMD's gross margin was 40% in Q2 2025 on a GAAP basis. While this is a decrease from the previous year due to inventory write-downs, the non-GAAP gross margin was a healthier 43%, indicating improving operational profitability. Debt to equity. The company's debt-to-equity ratio is manageable, especially considering the capital-intensive nature of the semiconductor industry. Its strong cash flow and recent acquisitions have been funded without excessive reliance on debt. Cash flow. AMD is a strong cash generator with a record-high free cash flow in Q2 2025. This financial strength provides the flexibility to invest in future growth and strategic acquisitions. Valuation metrics. AMD's valuation reflects its high growth trajectory and leading position in key markets. P/E ratio. With a P/E ratio around 41x on a forward earnings basis, AMD is not a cheap stock. This valuation is a testament to the market's high expectations for the company's future growth, especially in the AI and data center segments. It's priced as a growth stock, unlike its more mature competitor Intel. P/S ratio. The price-to-sales ratio is higher than its historical average, indicating that investors are willing to pay a premium for each dollar of AMD's revenue, again, due to its strong growth prospects. EV/EBITDA. The EV/EBITDA multiple is also elevated, reflecting the high value the market places on the company's total enterprise value relative to its operational profitability. Growth potential. AMD's growth potential is primarily driven by its strategic focus on high-growth segments. AI and data center. The company's data center segment is its fastest-growing division, fueled by strong demand for its EPYC CPUs and Instinct MI350 series GPUs for generative AI and high-performance computing. This is AMD's most significant growth catalyst, and a direct challenge to NVIDIA is dominance in the AI space. Client and gaming. AMD has been gaining market share against Intel in the client, PC, and gaming segments, driven by demand for its Ryzen CPUs and Radeon GPUs. Its semi-custom solutions for gaming consoles, e.g., Sony's PlayStation and Microsoft's Xbox, provide a stable, recurring revenue stream. Broad portfolio. AMD's diversified portfolio, which includes CPUs, GPUs, FPGAs, and adaptive SoCs, positions it to address the full spectrum of high-performance computing needs, from cloud to edge devices. Risk factors. Intense competition. AMD faces fierce competition from two industry giants. NVIDIA has a dominant lead in the AI accelerator market, and Intel is actively working to regain its technological leadership in CPUs. Supply chain dependence. AMD is highly dependent on TSMC for the manufacturing of its advanced chips. Any disruption at TSMC due to geopolitical tensions, particularly in the Taiwan Strait, or other issues could severely impact AMD's ability to produce and ship its products. Customer concentration. A small number of customers, including Microsoft, Sony, and Hewlett-Packard, account for a substantial portion of AMD's revenue. The loss of any of these major customers could have a material adverse effect on the business. Geopolitical risks. U.S. export controls on advanced chips to China present a significant risk, as this market is a key growth area for AI-related products. Dividends and returns. AMD does not currently pay a dividend and has publicly stated that it does not intend to pay one in the near future. The company's focus is on reinvesting its earnings and free cash flow into R&D and strategic acquisitions to drive growth and long-term value for shareholders. Market sentiment. Market sentiment is generally bullish on AMD. Analyst ratings. The consensus analyst rating is a buy, with a significant number of analysts giving it a strong buy rating. The average price target of $131.96 reflects confidence in the company's future prospects. Insider and institutional data. Institutional ownership is very high, with firms like Vanguard and BlackRock holding substantial stakes. This indicates that major asset managers view AMD as a core holding. While there has been some routine insider selling, there has been no significant open market buying from insiders. Macroeconomic impact. As a semiconductor company, AMD is highly sensitive to the broader economic cycle. A global economic downturn could reduce demand for PCs, servers, and gaming consoles, negatively impacting revenue. However, the secular trend toward AI and high-performance computing provides a powerful long-term tailwind. The company's international exposure, particularly to the Taiwanese supply chain and Chinese market, makes it vulnerable to geopolitical and trade-related risks. Technical analysis. AMD's stock has shown mixed technical signals. While it has recently broken through a rising trend channel, suggesting a potential slowdown in its upward momentum, it has also completed a positive technical formation, an inverse head and shoulders, which indicates further long-term price appreciation. The stock has support at $78 and resistance at $185. Corporate governance and ESG. AMD has a solid corporate governance framework with an independent board. On the ESG front, the company has shown a strong commitment to sustainability. Its 2024-25 Corporate Responsibility Report highlights significant progress in energy efficiency for its products and a reduction in its operational greenhouse gas emissions. It also received a favorable ESG risk rating from Sustainalytics, ranking 39th on the 2025 list of 100 best corporate citizens. Innovation and moat. AMD's competitive moat is based on its R&D intensity, strong patent portfolio, and a growing ecosystem of software and hardware partners. The company's core advantage lies in its ability to consistently design high-performance CPUs and GPUs that can compete directly with those from Intel and NVIDIA. The open-source ROCm software stack is a key part of its strategy to challenge NVIDIA's CUDA ecosystem dominance in the AI market. International exposure. The company's reliance on TSMC in Taiwan for manufacturing exposes it to significant geopolitical risk. Furthermore, a substantial portion of its revenue is generated outside the U.S., making it vulnerable to foreign exchange rate fluctuations and trade restrictions, particularly those related to the U.S. and China.